Well, joining me now to discuss Pinduoduo's strong Nasdaq debut is Thomas Graziani. He's co-founder of WalkTheChat, a marketing and IT agency focusing on helping brands to sell on WeChat and Weibo. So let's start by breaking down this first-day performance for Pinduoduo's IPO and its valuation. What are your thoughts?
Hi, Rachelle. So I think there is no doubt that the performance of Pinduoduo was outstanding on this first day, with more than 40% increase in its share price. It's not surprising. Pinduoduo has great assets. Not only the fact that it relies on WeChat with strategic investment from Tencent, which gives it a very strong competitive edge against Alibaba, but also the fact that it's extremely popular in smaller cities in China, so-called tier 3, tier 4 cities and smaller, which are where the growth is happening in terms of e-commerce. And this gives it a very, very strong foothold against existing e-commerce incumbents in China. So this great performance seems to be quite justified if you look at the position of the company.
So given how young this company is, though, what are the pros and cons of taking the company public at this point in time?
Well, I think there are a few things that Pinduoduo is trying to do. First, they need the money, right? Pinduoduo lost 200 million renminbi last year. They're still far from being profitable, and they're fighting a fight which is not easy against Alibaba. Because a lot of companies have seen some hype in the past. You could see that 1 or 2 years ago with live streaming, for instance, which took the country over completely, and then Alibaba started to develop the same features on Tmall and Taobao. And this live streaming company started seeing a lot of competition. So there is a need for these new players, as was mentioned. Pinduoduo is only 3 years old. To really get the cash and the momentum to maintain this competitive edge against Alibaba in order not to get crushed, because Alibaba is not going to just stand here and look at Pinduoduo taking its market share. It is trying to develop more social features. It's constantly evolving its apps. And there is need for Pinduoduo to act really fast if it wants to create a sustainable foothold and market share in this Chinese market.
So then what does Pinduoduo's rise mean for Alibaba and JD as they try and perhaps absorb some of these things that this company is bringing to the table?
Well, for Alibaba, it can be simply a way to understand the market better, right? As I said, for live streaming, Alibaba at this stage has such a strong foothold that they don't need to innovate on everything. They can just look at the trends and then copy the same kind of features on their app. For JD.com, it's different, right? Because JD belongs to the same ecosystem as Pinduoduo. It belongs to the Tencent ecosystem. So this could actually be a very good thing. For Alibaba, it's a bit different because they are direct competitors. And unlike live streaming, it's going to be harder for Alibaba to go against Pinduoduo because they lack some of the social network features which make Pinduoduo really stand out. So the strength of Pinduoduo is not just the app itself and its users, but it's also its partnership with WeChat, which gives it a very, very strong defensive position, which enables it to fight over Alibaba much stronger than if it was on a technology which was not relying so much on social. So it's very different if you look at it from the JD or the Alibaba angle. For JD.com, it's another brick into a Tencent e-commerce ecosystem where there might be a lot of synergy, a lot of interesting things happening. For Alibaba, it's direct competition, so they have to look at how they can look at it, learn from it, imitate it, and fight it back.
So as we look ahead at other Chinese IPOs that might be on the horizon, what's the incentive to list in the US versus other exchanges?
Well, I think there are a few advantages. First, simply being in the US, being supervised by the SEC is a sign of trust for investors. So that's definitely something that Chinese companies are looking for. Also today, Chinese companies are not just Chinese companies, right? They are trying to look at the global stage, and being listed in the US gives them a strong edge in terms of future M&A purchases, going outside China into the US or into other markets.
All right.
Now, that being said, one of the strong arguments for being in the US was also keeping control over the company. But the law is changing in Hong Kong these days, and it's not now possible for Chinese companies to list in Hong Kong while keeping their voting powers. So we might see a shift of IPOs from Chinese companies going from US to Hong Kong, as we've seen, for instance, with Xiaomi.
All right, thank you so much. Thomas Graziani there, co-founder of WalkTheChat.